4 months ago, gold set an all-time high of $5,589 an ounce. This week it hit $4,530. That is a $1,000 drop in 4 months. Most traders are asking the wrong question right now. They are asking whether gold is going to crash. The right question is, what do the actual levels look like at this price? And is there a reason gold should hold here? I pulled up MGC on TrendSpider. Let me show you exactly what the chart is saying. Before the chart, you need to understand why gold dropped. Because this move is not random, and the reason matters for reading the levels correctly. In late February, the United States and Israel launched military strikes on Iran. The Strait of Hormuz, through which roughly 20% of the world's oil moves, was effectively shut down for weeks. Oil went from the low 60s to over $100 a barrel. Brent crude averaged $117 in April. That is a 69% increase year over year. That oil shock drove inflation straight back up. Wholesale prices are rising at the fastest pace since 2022. Consumer prices posted the biggest monthly jump since 2023. And here is where gold gets complicated. When inflation drives rate hike fears, gold sells off. The market is now pricing in the possibility of a Fed rate hike by December. That is what killed the rally from 5,500. The question now is whether 4,500 is a floor or just a stop on the way lower. TrendSpider's Trends tab is the first place I go. The Trends tab automatically detects every statistically significant trend line on the chart. No manual drawing. On MGC right now, TrendSpider has identified the descending channel that gold has been trading in since the January high. The upper trend line has acted as resistance on every bounce. The lower trend line is where we are sitting right now. That lower trend line goes back to the breakout structure from late 2025, the same zone that launched gold into its all-time high run. If this level fails, the next significant structure TrendSpider is flagging is the 4,200 zone. What I want you to notice is that TrendSpider caught both trend lines in under 3 seconds. The descending channel, the structural support, all of it, automatically. That is the same work that takes a trader 10 to 15 minutes of manual markup done instantly. Now let me show you what the Fibonacci levels are telling us, because this is where it gets specific. TrendSpider auto-draws Fibonacci retracements from the significant swing high to the swing low. On MGC, from the all-time high at 55.89 down to the recent swing low, the 61.8 retracement sits right at 4,700. Gold tested that level this week and failed to hold it. We are now trading below the 61.8. The next major Fibonacci level is the 78.6 retracement, which plots to approximately 4,350. Here is what makes this meaningful. The 4,350 zone lines up almost exactly with the structural trendline support that the Trends tab identified. Two completely different analytical tools pointing to the same level. That kind of confluence is what separates a random number on a chart from an actual level the market is likely to respect. The next feature I use on every trade setup is the multi-timeframe layout. TrendSpider lets you view multiple timeframes simultaneously. So, I can have the MGC daily structure open next to the 4-hour execution chart at the same time. On the daily, the trend is clearly down from the January high. Lower highs, lower lows, no recovery structure yet. On the 4-hour, you can see where each of those bounces has been rejected. Each rally into the descending trend line has turned sellers back. There has been no breakout. This matters because if you were only watching the 4-hour chart, you might have seen a couple of those bounces and thought gold was recovering. The daily tells you the structure is still broken until price reclaims the descending channel resistance. That kind of alignment, daily resistance confirmed on the 4-hour, is exactly what the multi-timeframe layout makes visible in one screen. TrendSpider also auto-detects candlestick patterns directly on the chart. On the MGC daily right now, TrendSpider has flagged the sequence of patterns that formed at the top of the move, the rejection candles near 5,500, and the patterns that have appeared at the recent lows near 4,500. At the lows, TrendSpider is flagging hammer and doji formations, potential exhaustion signals. That does not mean gold is going to reverse. It means the selling pressure has started to slow at this level. Whether buyers actually step in to confirm a hold is the next thing to watch. Those candle signals combined with the Fibonacci and trendline confluence at 4350 give you a defined zone. Now let me show you the heat map, because it adds a completely different layer to this picture. The heat map is one of TrendSpider's most underused features. Instead of individual trend lines, it shows you a color gradient. The darker and more concentrated the band, the more times price has interacted with that level historically. On MGC, the heat map shows two significant zones. There is a dense red zone right at the 4500 area. That is the level we are currently sitting on, and it has a lot of historical interaction. Below that, there is another concentrated zone around 43 to 4350, which lines up again with the Fibonacci 78.6 and the trendline support. If gold loses 4500 on a daily close, the heat map is telling you the next real support cluster is not until 4300. That is a $150 air pocket with very little to stop the move. Here is where I land. Gold is in a technically broken structure on the daily time frame. The descending channel is intact. The 61.8 Fibonacci retracement has failed. The heat map shows limited support between 4500 and 4300. The macro backdrop is not helping in the short term. Rate hike fears are the primary pressure on gold right now. And as long as inflation data keeps coming in hot from the oil shock, that pressure stays. Central banks, including China, are still buying. Institutional forecasters still have $5,000 price targets for year-end. But institutional buying and price targets do not stop a technical breakdown in the short term. The level to watch is 43 to 4350. That is where the Fibonacci, the trends trend line, and the heat map dense zone all converge. If gold holds there and prints a strong reversal candle on the daily, that is the first signal that the sell-off is exhausted. If it does not hold, the next significant heat map support is not until the 4100 area. TrendSpider did not tell me what gold is going to do. No tool does that. What it did is take the 40 minutes of chart work I would have done manually and put it on the screen in under 30 seconds. The levels are the levels. TrendSpider just finds them faster. The free trial link is in the description. Pull up your gold chart, MGC, GLD, whatever you trade, and run the same analysis. The heat map alone will show you things you have been missing. Next week, I am running TrendSpider on 3 micro futures simultaneously: MES, MEM, and M2K. Same platform, 3 different instruments, 1 screen. I want to see whether the automated trendline detection holds up across all 3, or whether there are instruments where manual analysis still has the edge. Subscribe and turn notifications on. That video goes up next week.